Close the door. Okay, so what did I promise you guys? I said that I will be creating a video explaining some of my strategies, but however, I believe if I made the video upon the fact that what you should be doing after the second you open up TradingView, that would be a lot more suffice. Let's get straight into it. If you guys already watched my previous videos, it feels weird saying that, God. If you guys already watched a previous series of liquidity mastering, you guys finished all of it. This is just a finishing touch. What should you immediately be doing second you open up TradingView? Let's get straight into it. So I'm just gonna hop on Forex as an example, right? Daily, what do we look into? How has the market been? Literally, where are we? Hello? What has the market decided to bless us with today? Right? Hop on the daily. How are we doing for the past few days? Hop on the weekly. Look at your daily bias. What do we see? Insane weekly fair value gap right here, right? So we could tell price made inverse fair value gap. However, is the momentum strong? We made a high, new low. We might be pushing up for bullish. Daily. Okay, we started to accumulate a little bit. Not good. But we haven't swept the low. No, we did sweep the lows. And we have made a new high. This might be a change of direction to the downside. 1 hour, 4 hour, excuse me. What are we looking for? Large gaps, previous sessions. So today's Monday. So let's just look at Friday's session. Let's look at Friday sessions as an example. Friday, what happened? This was Thursday. Boom. Typically, if you're going to want to mark out sessions, I would say you should be hopping on the 1 hour candle, right? 3. So this is, for example, Asia, right? What's the first thing we see after Asia? We see huge amounts of candlesticks right here, marking out London, making its territory. So what are we going to predict? We're going to predict there is going to be a low for New York if you're trading New York session. Because what do we get? We get this insane inverse fair value gap at 12 p.m. Retraced up out of nowhere on Sunday. Boom, just crashed back down. That should have been your daily bias immediately. After London swept highs, we're going to exaggerate that was the manipulation leg, so we're going to aim for the downside. 15-minute. What do I look for? Typically, I'll be looking for, I don't know why I cleared it out. Hold on. This was Asia. You guys gotta bear with me on this. London. Boom. Back in New York. What do we wait for? We notice strong IFVG. Right. Could have placed a limit order, but it's not like anything would pop back up. IFVG to the downside. Boom. Accumulation, manipulation. You got the distribution leg. Simple. Target previous areas of liquidity. Where we're looking at 1. All 3 take profits, get hit. This is pretty much it. The first thing I look for, right? I look at what the sessions are going to do. Now that I'm on the 15-minute candles frame, right? So for example, today at 9 p.m., what did I look for? When I opened, not 9 p.m., excuse me, 9 a.m., what was the first thing I looked upon? Gaps upon the 15-minute time frame. You want to be doing this on both the 1 hour and the 15-minute. Right here, what do we see? Fair value gap to the downside. Right, we can tell price wants to go up and hit it as of now. 15-minute time frame. What do we see? This was actually an inverse fair value gap. The bearish downside, right? This is pretty much it. This is as easy as it gets. Only thing you're gonna want to check for is AMD on sessions, FVGs / IVGs upon 15-minute to 1 hour time frames. Everything just exploded. It's all gone. That's pretty much it. What do we get here? Not here, right here. Boom. 15-minute inverse for value gap to the downside as well still. On the 1 hour, yeah. right here, trade hit. If you had a limit order for somewhere like right here, because you could also see price breaks, resistance, and no one would have knew this would happen, just crashes back down. This is pretty much it. First thing you want to do once you launch up in TradingView, check upon your checkbook, make sure everything's aligned, have all of your backtest strategies that have been well, prove them, hop in the market, try to look for something that's along the lines of those. I speak better in the psychology videos. I don't know why. It's gonna be as simple as that. Mark out session highs and lows, wait for an inverse fair value gap, SMT divergence, anything along the lines that's gonna create a break structure, change the character to the downside, upside. Make sure you have a proper analysis tool, right? Strategies have been back tested, proved at least 70 to 100%. Can reach 100% of the time, at least 70% of the time, right? Because even if you're 51% profitable, you're still making profits if your trades are 1.5 to 2 risk to ratios. That's it. That's as simple as it gets. Only issue is the late nights, trying to make sure what strategies work, what strategies didn't work. I somehow managed to figure out this whole AMD IFVG to the 15-minute candle frame back in what? It's May already. Oh my God. Just settling in with me. Back in, I think it was December when I started figuring this out. Now it's rare. Now you guys might see me do a trade 1, 2, 3 times a week. I'm never trading all 5 days in a row. It's as simple as it gets. Be patient, listen to your configurations. That's it. Hop on the charts, kick some ass today.